Hello again, everyone. Welcome back. In this technical analysis of the stock market video, we're going to take a look at the Nasdaq 100 ETF, the Qs today, and then check in on gold, silver, and copper. Now, the market's about ready to get back in the saddle. We've had 2 weeks of holiday shortened trading, 3.5 days Christmas week, and then this last week we had 4 out of 5 days. So now this coming Monday, we're going to be back in the saddle. Everybody's going to be back at it. And we're going to get the jobs report on Friday. So let's take a look at the side-by-side of the industrials, the S&P and the Nasdaq 100. The Dow was down 260 points this last week. The last 2 weeks of trading were both inside the week of December 15th in here. So just little inside type days. It's hard to give a whole lot of weight to that type of price action. But when I take a look at the S&P and the Nasdaq 100, they actually did get a little bit lower here this last week than the week of December 15th, slightly. The S&P was down 28.37. The Nasdaq 100 was actually down, let me look at my notes here, 147 points, down 147 here. And yes, it did take out that December 15th week low. So that is the picture here with the side-by-side. Let's take a look at the industrials and the transports. Transports didn't do much this week. Minus 28.64, just a little doji candle. And they too were just the last 2 weeks inside that big expanded range that happened the week of December 15th. So let's come back and take a look at the Qs. Here's the Nasdaq 100. On Friday, the Qs were up 835. Big move, closing above the range, the highs of the last 2 days. Prior to that, big move, salvaged the week. Well, no, it didn't, mostly did, but it didn't, still was negative on the week, down 398 on the week. But you can see pretty big move here on Friday. So we'll see what kind of follow through we get. I'm still not super excited about this. I mean, this looks to me like it's rolling over. And when I take a look at the Elliott Wave picture, here's the way I'm counting it. I still think we got another leg down to finish the correction. Do I think the bull market's over in the major indices? No. But do I think we've got some indigestion coming up and some volatility here in 2025? Absolutely. And then I think the bull move will continue. The real question is, how long is it going to take to finish off, for example, in the Qs here, to finish off this wave 4 corrective move? So when I look at the daily view, this looks to me like a 3-wave down for A and a complex 3-wave up, WXY, zigzag, combined zigzag for B. That means that we're going to get a 5-wave move down for C. That's what I'm watching for. That's what I'm expecting. So right now on the daily view, here's what the reason I've got this labeled like this. It could either be wave 1, wave 2, and now we're working our way down in wave 3, or it could also be what I looked in within the intraday time frames. This could just be an A, B, and C, and then we go. Okay, so there's a couple of possibilities right now, but those are the 2 scenarios that I'm watching for. So that's where we sit here with the Qs. Let's take a look. I'm going to start off with gold. But first, I'm going to show you this tweet I came across that Jesse put out. Investors sold off gold-backed exchange-traded funds for a 4th straight year in 24, despite a backdrop of repeated record high prices and the start of monetary easing by the Federal Reserve. It's going to get interesting. I'm expecting gold and silver to continue to punch higher. I just think that right now it's going through some corrective, indigestion is the way I'd like to look at it. When you look at what it's doing here, we had a strong pullback in November, okay, from the high that occurred on October 30th. And then we've just been chopping sideways. So my take on this is that we're in a 4th wave, 4th intermediate wave. Now, my target is down here near the bottom of the channel, but it could also, here's 38% retracement down here at 223. So we'll watch and see what do we get, but this is what I'm watching for. Here's the prior fourth wave of one lower degree. So I don't know if we're going to get that far, but I think we could definitely get to the bottom of the channel, and it could very well get to a 38.2% retracement of wave 3. So I'm talking about retracing as a percent of wave 3. So that's what I'm looking for with gold. Now let's take a look at silver. And let's see, I was just going to mention to you what happened on Friday. So it was down $1.93 on Friday GLD, but up $2.09 on the week. So let's take a look at silver. Silver up 5 cents on Friday. It gapped up at the open, couldn't go anywhere, sold back off intraday, but closed positive on the day, up 22 cents for the week. Now, it's interesting too. I put these ranges in just to give some perspective. Here's the highs and low range of 21, 22, 23, and 24. And you could see the intra-week high for last year was 31.80. So what I want to look at is the Elliott Wave picture I've got on this. Now, I'm looking for this second wave to end, and it could very well be that it ended with the low right here on December 19th. We came back down and tested it here this last week, got really, really close to taking out that low, but we didn't. So now what I'm watching is a continued push up here and breaking this trend line on a daily chart. And I think if we break that trend line, we're going to have a shot at resuming the move to the upside. And at that stage, we would be in a third wave of a third wave of a third wave, and it could get real interesting. Okay, now I want to go back to this moving average view, and I want to take a look at copper. Now, this is not a heavily traded, I mean, when I look at here, I'm looking over in another window, and it tells me that the 20-day average volume on this ETF is like 81,000 shares. So it's not a heavily traded ETF, but it does give you an indication of what's going on with copper. So I want to look over here at the monthly view. Now this looks pretty messy, I'll admit. So there's a lot going on with the moving averages, a lot of volatility in here with the highs and lows on a monthly basis. And you can see it was down for what, October, November, December, and now we're up slightly here in January after just 2 days of trading. Now what I want to do is strip off some of this noise. So let's just go to candles only. So here's candles only. And then you still have a lot of volatility. You try to look at this and say, well, what the heck is going on? Well, let's strip off and look at close only. Now all of a sudden you get a little bit different picture. Monthly close only pricing, and then you take and draw a trend line across these closes, and if this starts to turn higher, so I'm going to be watching the daily, weekly, especially the weekly. If this starts to turn higher in here and starts to move, this could get really, really interesting on copper over the coming months and over the next year or two. So that's an interesting picture. I'll leave you with that. If you felt like the video was helpful, give it a thumbs up. If you're not a subscriber to this channel, hit that little subscriber button. If you'd like more of this information on a regular basis, head on over to joehenches.net. Everyone have a great week. We're back in the saddle.